Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, Dennis said it on Friday. It looks like he was right. The Biotechs were the driver on Friday. They had a great day. So we'll talk about Friday's trading action in relation to the Biotechs and kind of the rest of the market and why we're more. Today is looking like a buy the dip kind of day, at least. We have some news as well. Breuhan looking for a buyout potentially. We have an upgrade from FireEye, and Tesla was in the news over the weekend, or I should say Elon Musk was in the news over the weekend. He seems like he's always in the news. A couple other random stocks to discuss, and as always, we'll take your questions from our chat. Our guest today at 8:15 will be joined by a new guest, David Bruhan. He is the vice president of Schwartz and Company. He wrote an article in Barron's over the weekend that I know Joel is keen to discuss, and so again, that'll be at 8:15. Joel, what's happening this morning in the S&P futures?
In the green by $9.75 here at 27.72.75. You made a low just below the close of 63 even, so 61.75. That is our perhaps a downside target. On the upside, pre-market high 75.25. Folks, I got nothing for another 12 handles. So looks like we could get into the 27.80 handle today. Crude in the red by 24 cents. Wild day in that on Friday. $74. I'm just keeping an eye on that level to have a small USO short position that I'm hoping is profitable. Crude, as I said, down 21 cents at 73.58. Gold up $10 at 12.65.80. Silver in the green by 16 cents at 16.24. And don't look now, but Bitcoin trying to get above that resistance, up $130 at 6,715. Dennis, how you doing on this Monday morning?
Go back to that Bitcoin. Let's see that Bitcoin chart, because I was looking at it over the weekend there, and that looks like a reverse head and shoulders, doesn't it? Yeah, I think I could get bullish on that Bitcoin as a trade. It looks pretty good. Long-term investment, no thank you. But if you're trading crypto, I wouldn't want to be short that Bitcoin there right now. Scroll out a little bit farther, Spencer, and you'll see what I'm talking about. Oh, that's a little bit too far. So just look at like the action from June, July, August. You kind of see, can we zoom in on that June, July, or not August? We haven't had August yet. I would love to see the August action. That would be a good. If we could come up with that chart that shows the August action, we'd be making some money with selling those charts. But zoom in on that like June, July, you got a little reverse head and shoulders there. Just I saw forming there. See what I'm looking at? See what I'm looking at, Joel?
I do.
Kind of there.
I do.
Get about 7,000. We could be at 8,000. You know what? Technically. It looks, well, as Nick Sheen would say, looks frisky.
It
technically.
Does. And two things, too. One, I mean, it depends what your risk-reward ratio is, but, your risk down to the low of the move, and at 57.55, this is basis to futures. And I think, Dennis and I talk about technical analysis, and we go back and forth, but this is a pretty simple pattern that we both like. I mean, just look at all those, and I think we've been talking about this for a while. 6,700, 6,800, all those highs in that area, 66.75. So maybe give it some room, get above 7,000 here, and we got some room on the upside for Bitcoin. We are in total agreement here.
I don't think I've ever been bullish Bitcoin before. Have I? I don't know if I've ever been bullish Bitcoin.
I mean, maybe
still not bullish long term, but you know what? Maybe I should get a crypto account. I could become a Bitcoin trader. I'd like to buy that thing almost right now.
Dennis, you are so hot that you just open up the account and it will be like it's 7,100. You know what I mean?
I don't know about that, but I'm on at least a lucky streak here right now. Like, with the Biogen on Friday.
Let's go into that real quick.
Well, Friday, when you're hot, you're making good calls. I made a good call on Friday here on the show. I said, I think, we were trading around SPY 272.80, 273, and we were up. and you were saying, oh, the resistance is resistance until it's broken. But like, we got a running start at this. We got biotech that has been kind of dead in the water. At least the big ones had been dead in the water for a while. There's multiple people who tweet at me that saying some of the smaller biotechs have done really well there, and I thank you for those tweets because they have. But the big biotech like Biogen, Celgene, Gilead have really been doing nothing. With Biogen taking off, it just brought everything else up. Celgene broke out through the 80s up to 82.44. It's up another 80 cents here this morning. Gilead taking off, nice 2-day move in Gilead. Amgen took off there too on the Biogen news, and the IBB blasted off into orbit. That just, turned that was the leader for the market, and everything else followed. Even oil, which was down in the morning, turned around and ended up closing green. I mean, it was a big victory for the bulls, and I am fully back in the bull camp and a buyer of pullbacks here now. Bullish on Friday, remain bullish here today, although I'm not chasing. You're chasing it here now. I'd love a dip. Maybe we get a little trade war scare or something again to dip us. I'm looking at the dips to buy now, though, as opposed to the rips to sell. So you got to be able to flip. As a day trader and as a short-term trader, you got to be able to flip your opinion. And right now, the bulls are in complete control. Again, just be careful, though, because if you are buying here now, you are chasing. S&Ps, we're 269 here. If we look at the SPY, 269. 3-4 days ago. Now you're 276.5. You got overhead supply up at the resistance 279.5. The risk reward is probably not here now to take long positions there, but on pullbacks, I think it is.
All right. I just for Kiwi 22 was just asking about the intraday chart for Biogen, and on Kiwi 22, I'll just tell you, $360, $350 stock with news on it intraday. Hands off for me. I'm not, hopefully, if you have a long position, you're holding on to it. But if you want to look for moving forward here, 367.89. That was your high from Friday. So that's a definite target on the upside. I think the longer it takes to get to that level, you might have a little bit of fade. I would use the close as support, 357.48. I mean, the bears that didn't give up on Friday or the new bears in it, would love to see that mark of 357.48. And then Spencer, go to a monthly chart here. And this is what I do. Like when stocks break out of a range that I haven't seen in a while, I go to the weeklies or the monthlies. And in the monthly chart, you will see a Biogen, the yearly high was 370.57. So that would be my next target on the upside. And it's
it's interesting, Joel, that it failed right at 367.89. So within 2 points.
Close enough. Yep.
Close enough. So it found resistance where it found resistance. And I see where you're looking here. You zoomed out a little bit too far there, Spencer. But just looking back to 2018, just year to date, in January, we got up to 370. So I'm on board with that. And I am still long Biogen in my long-term investment portfolio. I've had it in there for a decade. I'm in from, I think, $49, so I'm probably sticking with it in the long-term portfolio. As a trade, I sold it on Friday. So I had it as a trade. I picked it up and, got lucky. I didn't think it was going to go that high. Obviously sold way too soon. I did not anticipate. I sold in the pre-market, the rest of it at 337. I did not anticipate the thing opening at 340 and then running another 20 points. So I thought it might be one that could give some back. No, that was not the case. So I obviously sold way too soon. Again, scalper blood and me getting out too soon. But wow, 60-point move on that. That was incredible. Even the CEO who came on CNBC on Friday was kind of saying, he kind of hinted that I think his stock was a little bit overzealous for, the trial that they did. Didn't give any, details really on it yet. And it's a good start. It was a success at phase 2, but he said we still have a long ways to go with this drug. So I don't know what happens if it fails phase 3, if it immediately falls 60 points on that news. I'm not sure, but right now it is hot. And, if it gets through phase 3, look out. But I don't know if it does that or not. So just be cautious. Be a long time away probably before we're going to get results for any type of a phase 3 study on this. But, as we get further along and move further along, keep that in mind that you basically got 50 points of froth here, hoping that this drug can get through. And, it's got the possibility, but, no Alzheimer's drug ever gets through.
Today's an important day because you're looking through the file through back on the monthly chart. I can remember the stock when this made its all-time high in March of 2015. That was on drug news also, but it ended up reversing on that day and ended up giving back a lot of those gains. So 370, big target on the upside. We got a guest at 8:15, but there is one earnings here. And how did we miss this one? HELE, Helene of Troy. Big beat. Spencer, you got the numbers?
Yep, Q1 EPS $1.87 versus $1.43 estimate. Sales for 354.6 versus 334.9. So nice beat on both the EPS and sales for the first quarter. They also raised their fiscal year EPS guidance by 15 cents from 7.30 to 7.45 on the low end of the range. That's also higher than the estimate. So beats across the board for HELE this morning.
Pre-market high is right where it's trading now, up 17.75 at 119.75. I mean, just use your half and whole numbers for targets. Just hit 120. I have absolutely no idea where to buy this thing on a pullback. I guess you got a double bottom at the 114.50 area. That's from the last two brackets. Dennis, any comments on this one?
There's so many brands. I was just looking at, which brands are in there. It's like Dr. Scholl's, there's Breuhan. There looks like 50 brands of different stuff in there. So, from a fundamental perspective, it's reporting. Everything is hot here right now. I mean, they got VIX. They got so many retail consumer products, which had been hot to a certain extent too. And, retail had actually started to, it had a little bit of a rough patch and didn't have a great day on Friday. But so many brands in this thing. Big pop, it's new highs. I don't know. It's hard to be a fader.
Exactly.
Unless the market turns around and rolls over, like it's reporting on the right day. And I'm going to continue to say it. This market, it's so finicky that if you're reporting on the right day, you're going to get a lot bigger pop than if you're reporting on a day, let's say the S&Ps were down. The S&Ps, we came in and there was trade war concerns and we were down 30 handles here this morning. This would not be up 20 points. But here we are, we're up again. Trade war has now been completely forgotten to a certain extent, it seems like, by the market. The bulls are back in control, and they're reporting at the right time. So I've been burned trying to fade companies on earnings here before, and the fade trade worked for a few days there, is not working the last couple of days. So I'm backing off on my fading right now. That's, again, adjusting on the fly. How do you know when the trades aren't working for them? You start losing money. You were fading that Biogen move on Friday, you got burned. So if you're fading this Helen of Troy move here this morning, you could potentially get burned. Maybe it comes back in, but right now the bulls are in control and fade trade is a little bit on the back burner, I would say. At least the pops.
Real quick here, let's just cover IQ. And man, this thing is throwing around some volume this morning, Dennis. Right. And are you seeing any news on it? I mean, it looks like
they trade volume. No, they don't need news. Those things just trade like crazy, Joel. I mean, you look at HUI, it'll be the same thing. It's already traded 46,000 shares. I don't know. There may be a headline. I didn't see anything on IQ, but I wasn't really looking actively for it there. But this thing trades.
It's trying to put a bottom in here. Friday's low was 28.94. Really, that's been the low of the move. So if you're trying to swing trade now, you're $2 away from it. If I wanted to try and buy it on the cheap, I'd maybe try and get it at $30, $29.92 was Friday's close. But the only thing, and let's just reiterate this, when Spinner and Dennis and a couple other people were in the chat in that initial run, it had no pain. It had no sellers. It had,
no overhead supply because it had never been up there before.
Yep. And, for me, maybe a 50% retracement someplace here, 46.23 at about a 16-point move. So I don't know if it 37, 38, but it's just not gonna whoosh right up there with.
I think you could get up there to test that
35,
34 area where you had multiple highs there, like looking just 33.75, 32.39, 34.21, 33.50. Call that whole area like $34. I think you could test that. I think I like your play. If you get a little pullback here, maybe a little profit taking off it gets back like $30. I don't mind that setup, and then my risk reward is defined. I would stop out at the low at 28.94. Stock starts making a new low. I want no part of the long. But now you shook out some people through 30. You're back up over 30. So I don't mind the setup here now. Like on Friday, I was saying I don't want any part of it. But, Friday now the trading has changed. So you have to be able to change on the fly. You're back up above 30. As long as the stock can hold, above the lows of the move, which is 28.94 now, you have it defined out. So I don't mind you taking a shot here. If you buy it at 30.95, you kind of got to give it down to 28.94, so got to give it $2. I would like a little pullback, and it's a better setup where I only have to give it $1.
Hey,
so
Dennis,
that's what trading's all about, just setting it up.
I gotta interrupt you. We got a guest coming on here at 8:15, and it's David Bruhan. He's vice president at Schwartz and Company, and he had a nice article in Barron's about tariffs, and he has a lot of history going back with tariffs. So let's take a quick break and bring on David, and this is going to be a very informative interview. We'll be right back.
All right, welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, Dennis Dick, now joined by David Bruhan. He is the vice president of Schwartz and Company. He's also the author of Spread the Wealth, More Haves, Fewer Have-Nots, and he wrote a interesting column over the weekend in Barron's that caught Joel's eye. David, how's it going this morning?
Very well. How are you all?
We're doing good here. Everyone knows I'm an avid Barron's reader over the weekend. Get some fundamental information. Just get away from all the short-term stuff that we focus on. And then I see an article with someone from Michigan, not only Michigan but Bluefield Hills, right in our own backyard. So before we get into the article, you have a very, very interesting background. You served in the Army for 7 years as a commissioner officer. Did some really interesting expeditions and stuff, but not a lot of detail on that. But could you just take one or two things from your military experience and your education at West Point and how it's helped you navigate the markets?
Well, having been deployed overseas and lived in Europe for 3.5 years, you're very aware of the global economy. So having lived in both Canada, at the time West Germany, and also been in Saudi Arabia and Iraq, you're very aware of both individuals and corporations and the politics of really the global world, and the people is most important.
Okay.
At the military academy, you really learn about a lot of military history, and that led me to the study of economic history. As an officer, you try to not repeat the mistakes of the past, either strategically or tactically. And as a money manager, you want to be aware of what works and what doesn't work in the capital market.
All right. So you wrote your article on the tariffs here, and it's really been, the subject of a lot of fluctuations in the stock market. And what you did is you took a historical perspective on it, and you went back to, the few other times that the route of tariffs has been taken, what the end result's going to be. So just to highlight a few important parts in the article and then what you're looking at moving forward.
Well, tariffs are an international tax that someone must pay. So tariffs were attempted in 1930 with Herbert Hoover and Smoot-Hawley. Tariffs were attempted by the Bush administration in 2002 with steel and lumber. And now we've got what's appearing to roll out almost a full-scale trade war with our neighbors, which the president announced in Davos, Switzerland. So you just have to be aware that the tariffs are an international tax, and they could negate some of the domestic tax cuts that the administration passed at the end of 2017. When prices go up, corporate profits go down. So the market peaked in January, We've been in a trading range ever since. I think that's largely due to tariffs and the impact on discounted future earnings. Everybody often talks about the markets being in a fixed place in New York or in London or Tokyo, but the market is the human mind, and it discounts future earnings immediately. And nothing impacts the markets like war or tariffs or currency or interest rate fluctuations. So there's probably 1 billion or 2 billion actors every single moment that are calculating the value of stocks and bonds. And this makes it very difficult for U.S. companies to export. What I'm doing going forward is for my folks who are younger or people in retirement plans, really nothing, because I think this is going to be worked out. For folks that have short-term money or retirees, I've called my clients, especially those clients who have children with 529 plans that are 16, 17, or 18 years old, and make sure that if this lasts and our trading partners retaliate, that they have at least 1 or 2 years of their education savings in cash in case this is prolonged. Again, I'm optimistic that eventually they're going to come to. President watches a lot of television. He knows about the markets. Clearly, the Republicans do not want to lose the House and the Senate. And when the folks in North Dakota and Minnesota voted for them can't get their goods to China or other places in the world, bottom line with politics is folks vote their pocketbooks. President Obama was elected because of the 2008 crisis. Roosevelt came into office in 1932 because of Smoot-Hawley and the fact that Herbert Hoover raised taxes in 1932 and the Revenue Act of 32, which was a disaster. So it's all about economics, and Americans are smart. They say the average American is far above average. People get it, and they'll go to the polls and they'll be furious. And what's ironic about the whole policy is it hasn't worked in the past. I understand that different industries may need assistance, but to use tariffs as a weapon when you've got a State Department with billions of dollars in budgets and tens of thousands of employees, to come up with a policy other than those that have not worked, I think we can do better as a great power and the leader of the free world.
David, what are your thoughts here? You got Harley Davidson coming out, and saying, obviously, and then Trump's attacking Harley Davidson when they come out, and basically, saying that this is going to hurt them, and then now he's on full attack. What are your thoughts here, though? Just the way Trump carries himself with, kind of, it almost is like a bully in a schoolyard to a certain extent. I mean, and that's what he's doing with these tariffs to a certain extent too. But, he threatened before and then he backed down on some of them. But it seems like this time he's actually going through with some, and he already has with some already. What are your thoughts about first, Trump's bite or bark being a little bit worse than his bite? And then secondly, is this going to scare, some of the other, like Harley Davidson, maybe to move operations elsewhere?
Well, you have to look at the president's background. He's a New York City real estate developer, and it's bare knuckles. I mean, can you imagine how difficult it is trying to get anything done in a major metropolitan area between the water board, the mayor, and everybody else you have to deal with? And also in real estate, it's all or nothing. I mean, either get the deal or you don't. So this is who the populace elected. He is the president. And this is the way he operates. So you have to set that aside and say, this is how he does business. But with respect to Harley Davidson, and there's a nail company in Missouri that looks like they're going to have to leave because they can't afford the tariffs, you have to understand the secondary consequences of actions with respect to economics. Economics is just like physics. There's a law in economics that for every action, there's an equal and opposite reaction. The same is true with the financial markets. And it's difficult to understand why the president would tee off on Harley Davidson when his tariffs have directly made them uncompetitive. And now they have to leave the United States to stay in business. Because with the tariff, if their products were reasonably competitive, people may be willing to pay, I don't know, a couple $100 or $1,000 more for a bike, either in the United States or overseas. But if you put a huge tariff on them because the Europeans are now tariffing Harley Davidson because we hit their steel, and they're not competitive, they will go out of business. We saw this in the Detroit area in 2002 to 2003 with manufacturers. Most small companies must sign 1 or 2 or 3 year agreements with the big three or the OEMs to make car parts. When you raise the price of steel on them and their contract doesn't allow an increase, they have to live off their balance sheet, and eventually they go out of business. So the Department of Labor or the Bureau of Labor Statistics released information, I believe, in 2003, and I'll estimate that 425,000 jobs were lost between March of 2002 and March of 2003 because corporations began to be very uncompetitive and lose money. And what happens when business is under duress? The largest expense in business is payroll. It's generally 60 to 70% of a business's outflow is paying your employees. So the first thing that happens when you need to cut is you lay people off.
All right. From the chat here, thoughts on the trade deficit. Is the trade deficit sustainable at the current rate, and for how long?
Well, there's a few of us that actually believe that the trade deficit is a misnomer. If anyone has ever taken accounting, the international balance of payments is on a balance sheet, not an income statement. So the balance of trade between nations is balanced. It's transactional. It's debits and credits. But if you want to hypothetically talk about a deficit, let's look at China, for example. President says that we have a $550 billion trade deficit with China. But China owns $1.1 trillion of U.S. treasuries. They lend us money because what we buy from them comes right back. So don't we owe China $550 billion if you want to do a net-net? We do. So capital flows return to the United States, in some cases immediately, because people trust us. Most gold in the world is not held outside the United States. It's held at the Federal Reserve Bank of New York because even our enemies know that we are trustworthy. The best example of this is what happened the Sunday following the assassination of John F. Kennedy. John F. Kennedy was assassinated on a Friday. Immediately on Sunday, what happened? We played football. Okay, at 1 o'clock, there was a pause and people gave respect to the president who was assassinated. But we had a kickoff at 1 o'clock in the afternoon in every stadium in the United States. That tells you a lot about who we are as a people. So it's a great country. We're a world power. We set the example. And the worst thing you can do is do something that our parents and grandparents made mistakes at. If you want to make mistakes, make new ones. That's a nice thing about history. This gives you, I wrote the article to try to educate the financial public, and hopefully somebody in politics or the administration will read this and realize that tariffs are not the right weapon of choice to use, because all you do is create tension between nations, cause markets to go down, and you hurt your own citizens.
All right, we've been on the line talking trade tariffs with David Bruhan, Vice President of Schwartz and Company, also author of the book Spread the Wealth, More Haves, Fewer Have-Nots. David, thanks so much for joining us this morning, and have a good day.
Thanks for the opportunity. Enjoy the summer while it lasts.
Oh yeah, we only got a few more weeks left of that here in Michigan, and then it's back back to the
Take care, gentlemen.
frozen tundra. Thanks a lot.
I mean, as far as like the timetable goes on this, from David's thesis here, we'll keep this up in July and August and September, maybe October, and then all of a sudden when we start getting closer to those midterm elections and the House and the Senate are up, maybe you'll get a little bit of a softening stance there. But tariffs, I mean, you read his article. I mean, the last couple times we've had some serious tariffs basically brought on depressions or major recessions. So hopefully this will get resolved soon. Dennis?
I mean, some good points. Like there is going to be obviously some other impacts. It's going to impact other businesses in negative ways here, U.S. businesses, some of them in negative ways. So some are going to benefit, some are not going to. I don't know if the net benefit is positive or negative overall. Obviously, administration believes the net benefit is positive. Some other people are more skeptical about that. Tariffs, like the author or from Barron's here has shown that hasn't worked in the past. I don't know if that's still to be determined or not. There is some people out there, and I know Jim Cramer's been supporting the president now as well. There's some people that really believe, the trade deficit's a serious issue. We need to attack it. And Trump's going directly at it via tariffs. Whether this works or not is still to be determined. I'm not an economics major. I took economics in school, so I'm not the guy to fix this problem here or not, or say if tariffs are going to work or not going to work. All I'm going to do is trade the action on it. And I will tell you, what I've seen here happen as of late is that the trade tariffs and the trade war, which was destroyed every time there was something with a trade war, S&Ps would fall 30 points over the course of the last month or so. This has really been in the headlines. Now all of a sudden, the market's starting to shrug it off. Yep. It's starting to shrug it off. And that's why I'm back in the bull camp here, because we're going to have, more issues with the trade war, but the market seems to be on the side of Trump a little bit more here now, saying, you know what, we've got to attack this problem. And that's why, the bulls are back in control here as well. So even if you get a headline that's coming from a trade war, might knock us down a little bit. And we did have that just a couple of days ago when they bought it right back into it. So now all of a sudden the market's starting to shrug it off, and that makes me a little more bullish here, at least on the trading front. And I'm not as scared of a headline about a trade war here now, or another tariff coming in, because the market is not being impacted negatively as much as it was a week and a half ago.
Going to the Google chat here, Grant Wilkinson. Joel, can you take a look at ACAD? Picked up a few on Friday. That was a nice move on Friday. You had a big move up on Tuesday, a couple days of consolidation, and then a continuation move. You got a pharmaceutical in here, so you're getting swept up in the old, biotech rally here. I see nothing on the charts really until you get to 1850. I see one high at 1839 and then a double top just around the 1850 level. So unless you got a big seller, someone with an opinion at 18 here, trading upsets 8 cents in the pre-market, 1850 would be my resistance. Coming back on the downside, you are trading up 8 cents. At the close is 1784. So you like to see it, end that first bracket above the close for a continuation move.
2-day move potential there. So yeah, get above the high from yesterday, 1815. This could be off to the races to $19. All biotech, all pharma is hot right now. So if you're coming here shorting these moves, you are fighting the rising tide here, because biotech had been beat up for a while and it's starting to get hot here again. So I know some of the smaller biotechs, have been moving already, but the big biotech is even moving here now. So careful, cautious if you're fading the moves in the biotech stocks, because they are hot right now. Things will turn, and that's why I encourage everybody to listen to the show every single day, because we're always talking about turns of momentum, or chat gives us ideas. Chat is or at Benzinga at PreMarket.benzinga.com has given us some great ideas over the course of the last years that we've been doing it there. We've got some great traders in there, and you've got to be able to identify the turns when they turn. But right now, biotech is hot.
Yep, and stocks in that sector as well. Let's move on here. Dennis, we are 3 minutes past imbalances. So what do you got for me?
Well, I hadn't even opened it up, so let's go take a look.
There's buy imbalance.
Look at GE. There's a buy imbalance in GE. It's like the first day in forever.
It had a good day on Friday. It had a good day on Friday.
It had a good day on Thursday. That Thursday was the tell. When you see these things reverse, it had been going straight down, and it opened and ran down. And then actually, if you look at the trading action on Thursday, it closed very strong. That was the tell. Then we had follow through with everything going up on Friday, and it went up. Now, the problem is you're coming into the 14 area. So let's go look at the book, because I would imagine there is probably some size already at 14, because I see the thing at 1398 this morning. Yeah, there's 269,000 shares for sale of 14. So that's your first hurdle, $14. Then if I'm looking at the book, it thickens up around 14 a quarter, at 1440, at 1445, at 1450, 380,000 shares. So it starts to thicken up again. But it's kind of clear sale until 14. At $14 is the first hurdle for the stock.
And I was a little bit too cheap on this one, because you had the big guy gap up. What was that news? I should know this news. Oh, they sold a unit or something, right? They got rid of something.
Yeah, they sold a bunch of stuff.
Sold it right off.
Yeah, and so you had a gap at 1305. You did fill the gap. Holy moly! What was I doing? Was I sleeping in this thing? You had a gap down to 1305. And on Thursday, it got to 1304 and closed at 1343. Oh, man. I'm sleeping at the wheel on this one, folks. Sorry about that. 14, as Dennis mentioned, that was your June 28th high. And then the high of the bump, 14.44. So let's clear that $14 hurdle. But nice gap fill and turnaround for GE. I'm sorry I wasn't paying more attention to this one. Craig in the chat.
Well, we want to do some more imbalances. Joel likes to take it away from me all the time. Joel's become the leader here, but I only gave you one. So I give you AT&T, 312,000 shares here to buy. AT&T and Verizon are both ex-dividend here today. So you're seeing buy imbalances sometimes as orders that are left in the book or that come back in. The designated market maker will adjust the orders that are left in the book overnight. But there's algorithms that take those orders off and put them back on, and some of them don't adjust. And that's why a lot of times you see a stock like it goes ex-dividend like AT&T and Verizon open a little bit too high and then start to come in. I will say typically these stocks are strong ahead of the ex-dividend date and week after. Well, Verizon here, 51.48, paid us 59-cent dividend. So the adjusted close is 50.89. So it is trading up here in the pre-market. But just be careful with these stocks because Verizon's run up 4 points in the last 3 weeks. This is frothy here. There's highs in the same area there. I think I'd actually be a seller of any pop here at Verizon just because of the ex-dividend and statistically shown that is week after the ex-dividend date. Same thing with AT&T. I'd be cautious. Maybe get up there and, get up to 32.70, 32.80, give you a shot on the short side here again. But if we go into, and the bulls are back in control, these are two stocks that just aren't, these are more bond-like. They're more cash cows. These do not participate usually as well as a lot of other stocks and can sometimes actually go down in an up market. So I think there's a shot here to short Verizon and AT&T into strength.
And the adjusted close that Dennis is talking about, that is just for dividend player, people that are just in this stock, they're just renting the stock, buying, a week or 2 weeks ahead of time. They get the dividend, and if you were buying, Verizon or even AT&T over the last 2 weeks, building a position to get the dividend, down 36 cents doesn't hurt you. AT&T had a low of the move at 31.40. The more pronounced move was in Verizon. That went from 47.5 to 51.5. So this has a little bit more room on the downside. Verizon was the benefited, I think, from a couple upgrades or price target changes last week. So this closing price from Friday and both of these issues could be very important. AT&T, it might not get back up there today, but 32.80, that's a triple top from Wednesday, Thursday, and Friday's highs in AT&T.
You wanted to go to the YouTube chat? They had a question.
It was the pre-market chat, and it was BPOX, and
crazy!
It's a lower price stock. It doubled on Friday due to some news, and it looks like it's got a continuation move. Dennis, when it go ahead Thursday.
I have this on my list to talk about.
Me too.
I don't know if I've ever seen a chart like this, where a stock goes $2 to 75 cents. And then on the next day in 2 days goes from 75 cents back to $2 and now to $2.50. I don't know if I've ever seen that before, where stock literally loses, you're talking about like 60% and gets it all back in 2 days. So I don't know what the story is here. If there was a headline that broke and then that headline was wrong, I'm not sure what is the fundamental information for the driver of price on this thing. But that is
I can tell you what the headline was. I meant to bring it up on Friday, but we didn't get a chance to. They were awarded a 5 to 10 year, $10 million contract with what they called a global social media giant. They didn't say which global social media giant. They just said a global social media giant. They said Black Box said the deal could potentially be worth $300 million or more. And I was hoping that this deal was with Facebook because it would be very apropos for Facebook to get into business with a company called Black Box. I just wanted that to happen.
What was the headline the day before or 2 days before that drove it down from $2 to 75 cents?
From Tuesday. I don't know if there was one.
Well, the thing's $2 and then it went down to 75 cents.
I don't know. Maybe someone got the memo wrong. is really what I'm thinking.
Somebody, the chat saying there was something about bankruptcy, potential bankruptcy.
I didn't see that.
So yeah, company is going to potential. I don't know. I'm not following the story at all. I just saw the chart and somebody alerted me to it. And I was like, it's the craziest chart I've ever seen. Then goes from $2 to 75 cents, makes another 75-cent low right on the kisser, exacto bond, and goes back to $2. I'm like, wow. They normally don't do that. Usually when you see stock over $2.75, I would say 9 out of 10 times that stock is probably going to continue to go lower. But this is the one time that it does not. And obviously the big headline that Spencer just talked about, that they got some contract or potential contract on the table. So maybe people were thinking going to go bankrupt. Not so fast, man, have a contract. And stock is back up. So, if that is the fundamental story, maybe the chart is justified, but that's a crazy chart.
Well, it traded 2.8 million on the day of that big drop, and then 8.5 million on Thursday. 63 million traded on Friday in the big move. Continuation here. Your pre-market high is 294. So what if you're long this thing, you want to see it get back to that pre-market high, take out $3, go 310 bid, and then the party's on. If not, you might have some people looking to take profits here. The longer it takes to reach that pre-market high at 294, I'm looking for perhaps a fade. I'm sure a lot of people would love to get out at the close from Friday, which was 203. So, I mean, this has all like the recipe of just, running this thing until who knows where. And then when the dust settles, it comes back down. But 203 was your closing price. I'm sure a lot of shorts would love to see that. And your pre-market high, 294.
Let's go over to ratings. There is a lot of ratings here this morning. Some interesting ones. Most of them are smaller companies, but holy cow, BIDU. Let's go to that one, Spencer, because we got the double upgrade.
Baidu catching an upgrade this morning from KeyBank to overweight. That was the only one that I saw. Which was the other one?
Credit Suisse.
Oh,
also upgrading it to overweight. They're their equivalent of overweight. So you've got two analysts both upgrading the stock this morning. Stock is trading up $6 here in the pre-market at 2.5%. So it is a big pop for BIDU. Close 251. Some of these China stocks were bouncing back on Friday. That bounce continues here this morning. Alibaba also with 71,000 shares to buy. It's up $2 here too. So don't call it a comeback, but some of these big China stocks are coming back.
Yeah. Nice pop here. The double upgrade up 648 at 58.25. Right near that the pre-market high of 59.34. I'll just look at the chart here. Not a lot in here. You had a gap down day a few weeks ago. You had a high that day at 261.74. The close end that day was 59 even. So there's a couple shorter term targets here for Baidu. Really hard to chase here on the double upgrade or price target raise. Dennis, Oak Hill Sailor is asking, in his analysis, Celgene is the cheapest stock he's ever seen in a while. What do you guys say, Dennis? And I know you thought it was cheap at like 90 or 100. Yeah. So
cheap stocks got cheaper.
Yep.
The one thing to consider, I agree. And I'm in it long term. I've been in it forever. I added to it, which I wish I wouldn't have did at 95. And I had bought this originally at $27. And my cost base was $27. I added to the position at like 95. My cost base came up to 51. I was like, whoa, I don't like doing that. But anyways, I did add to it. I agree. I think Celgene's dirt cheap. But that being said, if you've got a stock that's got a PE of 7 and it goes to a PE of 6, that means the stock falls like 15%. So, when you get these low PE stocks, it's, just because they're cheap, it doesn't take much for them to really go down, and they don't appear that much cheaper. I mean, a PE of 6 doesn't seem like that much cheaper of 7, but it's a significant move down. So sometimes cheap stocks just get cheaper. Biotech is back in favor. I do think we're going to test 85, 86 on this. I'm sticking with it long term because aging population. We're going to need drugs. I still think, Celgene is one of the good ones. I think if you got Celgene in your long-term invest portfolio and you look at it 20 years from now, I think you'll be happy you do it. I think if you have it in a short-term day trading portfolio right now, I think you'll be happy as well because I think it could see 85. But, I would probably be, if I was in this as a trade, I'd probably lighten up at 85 because that's where the old resistance was before, or old support was back in April. And we always play that theory, old support becomes new resistance. So I think you get back up to 85. I think you find some sellers. I don't know if we can get there today. We're $2 away from it, but this is a frothy market, a little bit crazy. Get up near 85. If I was in it for a trade, I'd probably sell at 85. I'm in it for a long-term investment, though, so I'm sticking with it.
Nice breakout over $80. That was on Thursday that you had that breakout. Went to 82.52, trading up 61 cents in the pre-market. I do see a level at 83.39. That was a high that you had on May 16th. So make sure that you take that out before you start looking for the number Dennis mentioned. That was your May 15th high at 84.99. And also, as I think I mentioned at the top of the show, I think they have a trial for an anemia treatment coming out. So check the dates on that. That's what's going to move the stock. That's what moved the biotechs. More than anything is these drug trials. And as you can see, Biogen was a benefit of that on Friday. So make sure you know when that trial is the results are supposed to be released. S&P futures holding up here comfortably, 9.5 points at 27.7250. Dennis, back to the ratings.
We got FireEye getting upgraded at Piper here this morning, FEYE. We were just talking about it on the show with, who was it? Who was it that we just had on? Sean. And Sean's a big fan. So Sean's happy this morning here because he's in FireEye and he likes FireEye long term. And Piper likes it short term here now, at least for the next year, because they gave an upgrade to it. Did they give a price target on this one, Spencer? I didn't notice if they gave a price target or not.
I didn't notice. Let me look. I can tell you what
he's going to look it up.
I can tell you what their old price target was. It was $24 was their older one. So I would have to assume it's above that with the upgrade. I just don't have the number for you.
Okay, so 1680, we were trading almost $1 here in the pre-market. It's a big move. But you know what? It gets some love. I think now pullbacks to be buy. Get this down in the lower 16s. I think you'll find buyers there now. So this, kind of started turning on Friday with a lot of other things. Now you get the upgrade. Now you got some shorts scared. If there is any shorts, I don't know. I never looked at the short interest. But on pullbacks there, I think you're going to find buyers.
Okay.
So if I can pick this up in the lower 16s, I'd like to do it.
Yeah, your pre-market high is 1688, and just basis the daily charts 1709. That was your June 21st high. I have seen this stock, have moods like this, open up, continue to rally, crawl over 17, and then all of a sudden, who wants to buy it at 17 when it closed at 15.98 yesterday? So keep an eye. Make sure you get well into the $17 handle. Take out 17.09. But this is more than the stock, moves in almost a week. So be careful buying it up 82 cents.
I never like to chase stocks, and this is one thing I'm just going to reiterate here again is when I see a stock move and I was like, oh, I like that move, I like it now, I usually try to wait for a pullback. Once you've identified that you think that it's turning and it's going to go into an uptrend, I don't buy something that's up 5% that day because it's chasing. I wait for a little pullback. Sometimes it doesn't pull back and I don't get it, and that's fine. I don't get that trade, but I've been burned so much chasing stocks that I just don't like chasing them. So if I miss the trade, I'm fine with it. But if it pulls back and gives me the opportunity, low 16s, that's where I strike because I have a better setup there. So you're coming in here, buying something up 5%, I mean, you're buying somebody else's profits here. So I don't like buying somebody else's profits. I like to buy my own profits or make my own profits. So I'd like it in the lower 16s, but I don't want to chase it here. Could it keep going and I miss a trade? Absolutely. I've missed lots of trades there. But you know what? I don't lose money on the trades I miss. I could lose opportunity costs. I'm not losing physical money. So I'm very protective of my capital, and I can't control the risk as well at 1680 as I can down at 16. That's why I'm not chasing it.
Okay.
But I like the stock.
Yeah.
If I was in it, I'd probably stick with it.
Okay. Anything else?
There was another downgrade. There was a downgrade that I wanted to. Yeah, Procter Gamble. Yeah. Procter Gamble catching a downgrade from Jefferies from buy to hold. I guess they're not feeling Nelson Peltz's breakup plan, I would assume. Is that the reason?
It's run a long ways. I mean, I like Procter & Gamble. I was hoping it would get down to $68. I'm going to throw it in my long-term investment portfolio again because that's where I stuck before. I missed it by $2. Now it's come back a long ways. I'm not chasing it up here. Consumer staples are back in favor because we were in a little bit of a more nervous market. That seems to be going away. We start making new all-time highs here. This is actually a stock that goes back out of favor. You also have overhead supply, $80. There's a seller there for 320,000 shares. And not only that, there's a seller for $12,079.88, $20,079.90. 14,079.94. People all getting in front of that big seller who's at 320,000. So literally, when you get up near 79.80, you got a wall of resistance there. So you're buying this thing at 78.58 or 79 today. You've got upside to maybe 60, 70 cents before you're going to run into a big, huge seller. Get above 80, then it's interesting. But until you can get above 80 here, I don't want any part of Procter & Gamble, not at this price.
They're knocking it down here in the pre-market, 71 cents. Not a lot of volume, folks. So, a stock like this that trades a decent amount of volume, 7-8 million shares on a day, to get it down 71 cents on a couple thousand shares may be a little bit overdone. You would like to, if you get any kind of a rally, I think that sellers will now be coming in ahead of the double close area, 79.21, 79.31. I expect sellers at 79. You are taking out Friday's low at 78.90. Your 2-day low, I like your 2 and your 3-day low here if you're just looking for a shorter term target. Thursday's low, 78.12, and then Wednesday's low, 77.78. So they're going to knock it down off this. I don't think it's going to be down like $2-3 on the day. But now that you got kind of sniffed 80 and now you're back under 79, I think those offers are going to be coming down on Procter & Gamble.
This question from Ice, and again, we've had Nick Shaheem. We have him on the show every Tuesday. He talks about this. He was just asking me if I ever, sell a put where I want to enter. So, for instance, on FireEye, I'd say I'd be a buyer down at 16. So, the argument would be, well, why not write a put down there and bring in some premium? And you know what? I get it. If you're willing to buy that, I'm more of a stock guy. I'm not really an options trader anymore. I've traded options, and I know quite a bit about it because over my 20 years, I've done a lot of options trading. But I kind of, just stick with the stocks. And yes, you can write a put. The one downside to that is, I always will say too, is you got to watch. That strategy works very well, except if you got into a really, horrible market where you went into like 2007, 2008, 2009. And then, you can get into trouble, and you've got to really be, able to, cover these in a hurry. Because what you're doing is when you're writing a put is you are, you're getting the premium in. So you're taking it on the risk of the stock with not necessarily, reaping any reward. So if it continues to run up, you don't participate any further than the premium that you keep. But if you all of a sudden go into, a market that turns for whatever reason, you could get put a lot of stocks. So what I'll only say is never write more puts than you can handle. I've seen traders where they, just start, I'd buy this down here, buy this down there, buy this down here. And they don't realize, well, all of a sudden, now I got to buy all these stocks. I don't have the money to buy all these stocks. Now I'm in trouble. Now I've got, margin calls coming at me, and I got to start getting out of stuff. That can make a mess of the portfolio. So I'm saying if you are running that strategy, never write more puts than you can handle.
All right, real quick, let's look at GBTC, the Bitcoin Investment Trust, and look how tight this chart is, Dennis. Look at all these highs on the daily at 10:30, and that equates to 6,800 in Bitcoin here. So GBTC bunching up here, clear breakout over 10:30. That equates to 6,800 in Bitcoin. So just keep your eye on that level, respect it as resistance. But as we said, Bitcoin looks a little bit itchy here. GBTC definitely got to mop up that seller at 10:31 here. So corresponding nicely. Dennis, do you ever trade that GBTC or not?
No, and I don't trade anything with Bitcoin. I've just never been a fan of it, like I've said before. Okay. So this is a way to trade it, but then there was the huge premium that you were paying over that. And if, I was going to become a Bitcoin trader, I'd just open a crypto account and trade it. But you can't, you know what? Unless you're fully algorithmic, you can't trade everything. So I'm a stock guy. I stick with stocks. So this crypto stuff, yeah, sure, that chart looks pretty good. If I was in, I was a crypto trader, I'd probably be long Bitcoin here right now. I'm not a crypto trader though, so I'm not. And you got headline risk and that stuff too. Something can happen, the technicals can take a backseat in a hurry. If there's some regulation or anything like that, we know it bounces it around. But right now, I'll tell you that the Bitcoin chart looks good to me too. But I'm not a Bitcoin trader.
Dennis, did you ever dump your AMD? or do you still got it?
No, I sold it. I sold on the show. I said on the show I sold way too soon.
Oh, okay,
So,
okay.
Yeah, I came all the way back, and it was and you know, it was a huge move from like $9, and I thought at $14, I was like, it's kind of come back, and obviously it continued for the next month up to over 16. So I wish I would have stuck with it, but I had a smaller position in it. It was a half-size position, and I was trying to clean up my portfolio a little bit too. And you know, not that I was just, you know, some of these smaller positions that I had that were kind of more spec plays, I was dumping a bunch of those, some of them at a loss even too. So I was cleaning it up. I had, you know, like 100 stocks in my portfolio. It's too many to manage. I think I got down like in the 80s now. So just kind of cleaning up the portfolio a little bit from some of the spec plays that I had in there before.
Okay.
That's portfolio completely different.
Okay. All right. Let's just take a look. I'll just give you a quick number here. You had a high of the move at 1734. And then you came down pretty hard off that. You made a 14.54 low, divided by 2. Add that to 14.54. You're looking at a rebound here, and it's over the 50% here. So just keep an eye, maybe a nice whole number like $17. I see a high at 1687. That was on June 21st before it had the big drop off. Another high at 1713. So if I'm looking for this run to continue here, get back and take out that 1734, I'm looking for it to clear 17 first, and with a pair of highs here. So keep an eye on $17 in AMD.
Just back to imbalances here because they keep moving around so much. So they are starting to go mostly to the buy side here now. There's a few interesting ones here too. I just want to also say we obviously have earnings coming up here. I was noticing some buy imbalances in some of the banks, which made me think about it. JP Morgan, 47,000 shares to buy here now. Just looking over at Citigroup, which is going to report later in the week too, 23,000. Those are kind of small, but you know what? The banks started to show a little bit of life on Friday. So you have look at this Bank of America chart. So you had 3 lows almost right in the same area. You did make a new low, 27.63, but then you got back up over 28. So now you've got a defined out. So can you make a trade on the banks now? Still long term. I don't know if I'm getting off. I've been in the bear camp so long here. Maybe it's been I've overstayed my welcome here to be bearish the banks. So I don't know if I'm getting bullish the banks here, but you do have that pre-earnings run that I love to play.
There we go.
And they are going to be the first ones to report here. On Friday, we got JP Morgan, Wells, Citigroup, PNC Financial. So 4 big banks reporting here on Friday. Typically, they show strength ahead of those earnings reports. So can I come in here buy them today? Maybe they're going to show strength all week. I will say I'll probably be long them for trades Wednesday and Thursday ahead of the reports because they typically show some strength. I don't know. I might even get long a little bit early. These are not long-term investments here. I'm not saying come and throw JP Morgan in a long-term investment portfolio yet because I think there's still some unknowns here. But as of trades, I like them this week because they are going to report and they typically run up ahead of earnings. That is the alpha that I look to extract as some of my best trading is actually just buying stocks before they report and selling them right before they report, like not holding them through the report. Buying a couple days report, sell them, at 3:59 the day the day before they're going to report. Sell them at the end or even on limit on close, just not holding them through the report because that's a wild card.
Yeah, we'll have Nick Shaheen on tomorrow, and he'll talk about he likes that strategy too. And what he likes to do, if he can book a little profit, then he'll go lotto on the number, and it will be with the house's money. So that's a possible strategy for these banks coming up. Big earnings day on Friday. We got what do we got? About a minute and a half here, and Larry Glickman's talking about the price action in Wynn. I am not seeing any news on this thing, but I think I'd be careful on this one. All right, Nomura maintains buy on Wynn, lowers price target to 181. I mean, after you have a shellacking like you did last week, and then all of a sudden you're getting a $3 bump here, I'd really want to see continuation. We're almost $2 off the pre-market high of 161.86. So, Dennis, overhead supply in this one. Any thoughts?
Little bit, but I'm not looking for just as much as I was not looking for longs last Monday. I'm not looking for shorts, active shorts here right now. I'm looking for stocks maybe that haven't gone yet, or maybe that stock's going to move Is it a little bit, maybe it was 151 3 days ago. Am I coming here buying it now? No. I'm looking for pullbacks to buy here now, though. So maybe I'm not going to get a lot of opportunities here on another update, but there'll be a headline here. There'll be another nervous day here where we'll get a pullback and we can strike. Or you pick on a stock that hasn't gone yet, because there is a few that obviously, haven't really ran as much as some of the other stocks have yet either here. So that's kind of my style. So I'm not coming here and short and win at 160 because it's overhead supply, just because this market is hot here again on everything. Everything was hot on Friday. So I don't like to fight the tape.
All right. That's going to be it for us today, everyone. So thanks for listening. Thank you to our guest, David Bruhan. Thanks to all of you who joined us in our chats on YouTube and premarket.benzinga.com. You can catch a replay of this show on YouTube, on Benzinga's YouTube channel, Benzinga TV, or catch the podcast on iTunes, SoundCloud, Stitcher, TuneIn, or the Google Play Store, wherever it is you get your podcast. That's going to be it for today. So on our show tomorrow, we're going to be joined by Nick Shaheen. He joins us every Tuesday. He's the author of Create Income with Option Spreads. But that's our show for Monday. So hope you guys have had a good morning. Hope you have a good rest of your day, and hope you join us again on Tuesday. Have a good one.